Alright class, welcome back. Today we're going to finish chapter 7. If you recall, in the first part of chapter 7, we were taking our journal entries and we were moving them over into the individual general ledger accounts. So in the journal, we recorded all of our transactions as they took place, and then what we did is we posted them, or we moved what happened in a specific account over to its individual ledger account. So if cash was affected, we moved it over to cash. If accounts receivable was affected, we moved it over to accounts receivable. We were just taking the information that we had from the general journal and we're moving it over into the general ledger. And this is what happens. When we're finished, we have all these different accounts with all the different account balances. Okay? Remember, the bottom number in the ledger is always the balance. So you would look at it and you would know that by the last day of that month that that's what the balance was. So let's take a look at it more closely. If we look at the first one here, we can see that this is our cash account and our number for the cash account is 101. And if we look, the last day of the month on March 30th, we have a $7,000 balance. This is the balance column, and if you come all the way down, because the last transaction was a credit, we subtracted it and we brought down the current balance. We move to the next one, accounts receivable, account number 105. We look at the last day of the month, and we follow it over into the balance column, and we see here that it actually has a zero balance. Right now, we're not owed any money from our customers. So we put a line through it. We just put a line through the middle here to show that it has a zero balance. Accounts receivable, Polk & Company. This account number is 110, and on the last day of the month that it was affected, our balance is $2,400. If the account's normal balance is a debit, you always have your balances on the debit side, right? So you keep coming down, and you always keep them on the balance side. If you notice, nothing is ever written on the credit balance column in any of these accounts because that is not their normal balance side. Okay? So let's keep going. Office equipment, 120. Balance on March 6th, the last day it was affected, 3,100. Okay? Camping equipment, all the way on the bottom, I don't know if you can see it on the screen. There we go, March 4th. Again, the balance, 2,500. It's a debit, so we write on the debit side. Now let's look over here. Accounts payable. Account number for accounts payable, 201. On the last day of the month that it was affected, you follow it over into the balance column. But look, this one, we keep the balance on the credit side. That's because accounts payable's normal balance side is credit, so we keep it on this side. You will never write anything on the balance column, on the debit side in the balance column for accounts payable because its normal balance is a credit. Let's keep going. Accounts payable, 201. Balance on the last day of the month, 1,500. Capital, balance on the last day of the month, 5,100. According to March 6th. Withdrawal, 305. Last day of the month, 2,000. Equipment rental revenue, the account number is 401. And on the last day of the month, we follow it over. And we see here that the balance is 9,400. And then finally, we have advertising expense. And on March 30th, we spent $300 for advertising expense. As you can see that all the accounts that have credit balances, we never wrote anything on this side. We never wrote anything on the debit side. You only would write the amount on the normal balance side. You just keep updating the balance. You would add it if it's an account that has a debit balance. Every time it's debited, you would increase it, and you would just write that on the debit side. If the account has a credit balance, same thing. You would just take the credited amount, and you would add it, and then put the new balance. So this is what it looks like as far as our ledgers. This is complete ledgers, but now we have to take those balances and we have to put them on trial. Alright, so in a trial you're trying to prove that something is innocent or that somebody is innocent. Or you need to prove in this case that you recorded these transactions properly into your ledger accounts, and the way that we do that is we put the balances on trial to make sure that they've been done the right way. And we do that on a sheet that looks like this. So this is our trial balance. Okay? And what we're doing is we're just listing all of our accounts, and we're listing that last number, the balance that was in that account. And then we add them all up to make sure that debits and credits equal each other. And if they do, that's it. We proved it. We proved that our balance for our accounts was equal to each other, and the trial balance that we do is correct. So first thing you got to always do is you got to write the heading. Who, what, and when. The name of the company is who. What would be, what do we call this sheet? In this case, it's a trial balance. And typically we do trial balances for the last day of the month or the last day of the period, to show that at the end of that period, this is what the balances of all our accounts are, debits and credits, and see if they equal. So the first one that we would list here are all of our accounts. And what you can see here If we look here, guys, these are all the accounts that we use in the last ledger. So we listed cash and bank, accounts receivable, office equipment, just all of our accounts. We put the account numbers and the names of the accounts. Now we have to go and we have to write in the amount. So if we remember, for cash and bank, the balance was $7,000. So we would write $7,000. Cash and bank has a debit balance, right? Accounts receivable, there was no balance, so we just put a line. But we put the line on the debit side because that's the normal balance side of accounts receivable. Accounts receivable Polking Company, debit balance. Office equipment, debit balance. Camping equipment, debit balance. And all we're doing, guys, is we're just taking this last balance, that last line on our ledger in the balance column, and we're updating our trial balance. So up to this point, all we did, we listed all the accounts, and we just wrote whatever that final number was. If it was a debit, we put it on the debit side. If it's a credit, we write it on the credit side. Okay? So now we need to add them all up to make sure that they equal. So when we add up all of our debits and we add up all of our credits, we come up with $17,300. Now in accounting, there's something that's called ruling. And ruling is just the way that we put lines to indicate what it is that we're doing. So anytime we're subtotaling, what we got to do is we draw one line to say that everything above it is being added and subtracted. And then once we come up with that final number, we put two lines, you can see the two lines there, to show that that's it. That's our final answer. Nothing else can be added or subtracted to those numbers. So look, the total of our debit column came to $17,300. The total of our credit column came to $17,300. Debits and credits equal each other. We just proved that we moved our transactions properly from our general journal over to our general ledger. So this is the trial balance part of chapter 7. Okay, make sure that you write the word totals here to indicate that those are your totals, and that's it. We're just verifying what we did in the first part. All right, thank you.